Good morning, friends, and welcome to the pre-market view. US markets were flat to marginally up, and we had some positive data points coming out from US. The Q2 GDP came in at about 2.4%, which was much better than the Q1 GDP. Also, the jobless claim data came in at about 3,31,000, which again was better than market expectations. But we didn't see any material impact on the markets per se. The 10-year bond yields in US continues to hover around 2.72. And European markets were up anywhere from 0.5 to almost about 1%. No major data points to look at. One of the main reasons why we saw pullback in European markets was the fact that the immediate military action against Syria has been averted, as the parliament in UK have not approved this particular action, and even Mr. Obama has indicated that they would wait for a few more days before they really think of the action, and UN is currently inspecting there to check if the chemical weapons were used against the civilian people. When we look at the Asian markets today morning, Japan is down almost about 0.4%, and even Hang Seng is down. So we are seeing a subdued start for most of the Asian markets, and SGX is also suggesting that we are going to have a flattish start. When we look at the data points, the FI flows in the cash market was negative to the tune of about 248 crore. Even the domestic institutions were sellers to the tune of 76 crore. However, in the index futures, the FIs were net buyers to the tune of 575 crore. We saw a smart pullback in our markets on an expiry day, wherein the IT was the main sector in focus. Most of the stocks moved up by about 3 to 5%. Even some of the beaten down banking names also saw a smart pullback, like HDFC Limited, HDFC Bank, Kotak Bank. Even some of the other private sector banks like Axis Bank were better, and even the metal as a pack did better. So Hindalco, Jindal Steel and Power, some of those names were doing better, and even the breadth was much better than what we have seen before. But when we start this new series in September, on the rollover front, the Nifty open interest compared to the August series has started on a lighter note. The overall open interest is much lower than what it was in the August, but the Bank Nifty open interest is at least 18% higher in the month of September in the beginning, which means that the short positions have been rolled over from previous month, which means that people are not so positive on the banking names. And given the fact that the land acquisition bill has been passed, which is not perceived to be good for the industry, overall the sentiment or the expectation for September is not that great. On that note, let me invite Shaival to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning, friends. Let's have a view on derivatives. Friends, we have seen that August series have witnessed all the possible whipsaws and volatility during the series, and it's finally ended about the mark of 5,400. Now, talking about the open interest in Nifty future, we have seen that September series had started with 1.61 crore shares in open interest compared to that of 1.84 crore shares in August series, which is marginally lower. Now, but on the good note, we have seen that the PCR ratio has started with mark of 1.16. If we see back to the previous series, it started with 1, and this is particularly a good sign for the market. Talking about the rollovers activity, friends, it's clearly visible that the rollover in Nifty futures as well as market-wide was comparatively lower to that of the August series. Now, Nifty future rollover stood at 51.87%. We have also seen that the rollover cost has decreased, which has been clearly indicating that whatever positions have been rolled in Nifty future is on the short side. Now, as this is being the first day, there would be an addition in every strike possible in the open interest terms, but 5,300 put option stands with highest number of shares in the open interest, whereas if we have the look on call side 5,400, the activity is widespread and it's visible in 5,400, 5,500 and 5,600 strikes. The implied volatility has cooled off marginally. Now, talking about the broader range, or say the break-even points for this month, the straddle break-even point on the lower side is 5085 and on higher side it's 5715. Now, the PCR ratio has started with the mark of 1.16. The implied volatility has cooled off marginally. So what we feel is that the bias for the market is positive, and from here on we feel that the volatility India VIX would cool off from here on, and market may go up to 5,600 levels, and on closing basis 5,300 might act as a good support for the market. Now from intraday perspective, Hindustan Unilever is looking positive, so one can go long by maintaining a stop loss of 596 rupees and 90 paisa. Thank you.
Here are the important news and events that we are tracking today. First of all, the Q1 GDP for Indian economy would be out, and that number is likely to be around 4.6%, and this is going to be the slowest pace since Jan to March 2009. And what is more concerning is that even for the next year, we have started seeing that most of the economists and research houses have downgraded their numbers, and some of them have quoted a number below 4% as well. So that is definitely going to be a bit of a negative for the market sentiment. Finally, the Lok Sabha has passed the land acquisition bill, which is going to be an act now, and this is perceived to be a bit negative for the industry because it will take a much longer time for the industry to acquire the land, and also they will have to pay almost about 4 times the market value of the land. So from an industry perspective, this is not considered to be positive for real estate companies or for some of the other industries. But for the farmers, this would definitely be positive, because the overall value that they will get would be much higher than the current market price. Reliance Industry finally has got the approval to invest almost about 3.18 billion in the R series gas field in the KG-D6 block, along with their partner BP, and the DGH has approved the plans of Reliance and its partners to produce about 13 to 15 million standard cubic meters per day of gas for 13 years from this particular basin, and overall D34 is estimated to have reserves of about 2.2 TCF. Some more trouble for Mr. Jignesh Shah's FT group, as it has been found that their group company Indian Bullion Association was actively trading on the MCX, which is in violation of the regulations of the exchange. So there could be some negative reaction to the financial technology stock in today's market. And finally, the government of India has selected Deutsche Bank and Goldman Sachs to manage 5% divestment in Coal India stock. Emphasis came out with their numbers for this quarter, and the top line was quite muted, and it declined in fact by 7.7%. However, at the net profit level, they did much better, and net profit grew almost 9.1% on a quarter-on-quarter basis. And there might be some positive reaction in the Emphasis stock in today's market. Wipro is looking at launching a few aviation products along with Qatar Airways, which would basically be an enterprise solution for the aviation industry, which would include products for crew management, route profitability, and the loyalty management. So one can go long on Wipro with a stop loss of 464 and a target of about 487 to about 496. L&T, some positive news there as well, as the consortium with Pipavav Defence has received an order worth about $170 million, which is about 1152 crore. From ONGC, so one can go long on L&T with a stop loss of about 709 and a target of about 745 to about 758. That's it from all of us, friends. Have a great weekend and see you on Monday morning.